It definitely hasn't been a normal fall season, and I want to talk about some of the dynamics happening in the market today in Sacramento. This is Ryan with SacramentoAppraisalBlog.com. I have 11 images I want to quickly scroll through. I hope this will be helpful. My goal is for you to leave this quick presentation with some facts and some perspective to share with friends and clients and such. So let's dive in. So first of all, we've had 6.4% more homes with pools sold this year in the Sacramento region. This probably isn't a surprise, but it just clearly shows in the data that buyers are favoring homes with built-in pools, right? You want to quarantine in style and have that ultimate backyard. One of the big narratives this year is that in the region that at the beginning of this month, there's 47.3% fewer listings. All right, so when you compare 2019, no matter what the price range in blue with 2020 in green, we're simply seeing fewer listings. And I'll let you kind of look, by county what this trend is, but it's been astounding. There's more competition and less to choose from. Here's one thing that's abnormal about the market today. So here's the median price in dark blue. Now in 2020, the previous years, 2019 in light blue and 2018 in green, you can kind of see the normal seasonal trend where the median price goes up for half the year, then it softens. Well, right now what we've been experiencing, the median price has just kept going up. Okay, normally it should be sort of tapering off at this time, but it just shows that we have a market where we're experiencing intense demand. All right, the median price is actually up about 16% from last year. Now, my closing two slides, I have some thoughts on that. Be really careful about sharing this stat. We have to know what it means. Here's the thing. When we look at sales volume in dark blue in 2020 and then compared to light blue in 2019, we can start to see that sales volume is sort of descending for the year. Okay, it's very normal to see there are more sales, they go up for about half the year, and then you start to see this seasonal descent. Okay, a lot of people have said, well, we're not going to have a seasonal market this year. I would say, well, the market is hyper aggressive. It's not a normal fall, but we are seeing some signs of slowing. Okay, I'm not saying that the market is slow, it's definitely not, but definitively the data are really showing us that the market is slowing in terms of volume. Okay, here's some interesting news. This month we finally caught up to where we were last year with volume. Okay, all of these golden bars from 2013 through 2020, they represent the market sales volume January through October. And so all year long we've been lagging the market because when during the beginning of the pandemic we had so few sales. Well, this month we caught up. Okay, but here's the interesting part. I really think it's El Dorado County that's helping us catch up because when you look at Sacramento County from January to October this year with last year, we're still down about 800 sales. But volume has been so strong due to increased migration to El Dorado County and even some in Placer County that's made the difference. That's essentially why we've caught up already. Okay, and so just something to watch over time. The condos, 14.1% fewer condo sales this year in the region. Okay, there's been a big difference. And when we really look at 20 years of condo sales, we see the percentage of the market is almost as low as it's ever been. There's really only been one other year in 2008 where we saw fewer condo sales as a percentage of the total market. So it just goes to show that we are in a market where not everything is the same temperature. All right, home size in the region has been dramatically higher, whether we look at the median size in red or the average size in blue. It's been there's been this spike in recent months where buyers have been purchasing larger homes. But you can see last month, both the median and the average showed a slight decline. And so this again shows seasonality because what happens during the fall season is buyers typically start to buy smaller homes. Maybe some of the bigger stuff is no longer on the market. And so this is what we would expect to see during a normal fall season. All right, now here's something to consider. There's a ton of dots here. This is a duplex market in Midtown and downtown. So these are sales from 2013 onward, but it's interesting because do you see this trend line? It's fairly flat lately. And so it's interesting because in most of my appraisals, when I look at the trend line, I mean, it's still going up and it's screaming up in some areas, but it just goes to show that not all property types or locations are experiencing the same trend. I would call this duplex market or a fourplex market. I did a fourplex appraisal a couple weeks ago. is very flat. Okay, very strong. There's not an oversupply, but nonetheless, in terms of prices, it appears somewhat flat. Okay, so something to watch. The rest of the duplex market, this hasn't been my observation. Lower priced duplexes look like they are still moving upward. Okay, here's some glowing news from North State BIA. New construction sales in September 2020 were up 71% from last September. Okay, and this number is really sensational because we don't have that much new construction, but it's astounding because there were 259 more brand new homes built by regional builders this September. And so it just shows that during the pandemic, there has been a strong appetite for new construction. And it kind of makes sense, right? As inventory is diminished, there's so little on the market. Well, of course, buyers would go towards new construction. Okay, two more slides. If you like this, please give it a thumbs up. Okay, I want to work hard for you. I want to keep doing these as long as they're relevant for everyone. So here's where I want to show you why it's so important to interpret prices correctly. Okay, this shows July through October 2019 and it compares to July through October 2020. I chose these 4 months because these months have been really aggressive in the region. And so I just wanted to sort of compare and contrast to see, well, what are the differences? Okay, and so this shows the change in volume by price range. And so when we look under 300,000, in black in 2020 compared to 2019 in blue, there's been a substantial difference. I think it's not a surprise, but we kind of have to look and go, oh, wow, there's been a huge change under 300,000. There's, it looks like almost half the amount of sales going on. Whereas above a million, we literally have a little bit more than twice the number of $1 million sales this year. And so we can kind of see what the market's doing. Now, here's a different way to look at it. Below 300,000 is down 47% from last year. Above a million is up about 103%. Okay, but when you look below 400,000, there's 20% fewer sales, and then above 750,000, there's 750, or excuse me, there's 75% more sales. Okay, too many numbers. Okay, that's a mouthful. Here's my point. When you look at price trends, we look at the median price and go, oh my gosh, the median price is up 16%. But here's the deal. There's fewer sales happening at the bottom of the market, and that pushes up prices. Okay, and then there's more sales in the luxury price range for the Sacramento region, and that again pulls prices up. And so when you pull up comps in a neighborhood, we very often won't see a market where you're comparing and contrasting comps from 1 year ago where they're up by 16%. Okay, so we have to think, why is this number at 16% the way it is? And some of it comes down to larger homes, but some of it comes down to there's simply fewer sales at lower price ranges and more at the top. Okay, does that make sense? If not, I wrote about that today on my blog. You can check it out. But this is me. If you have any questions, let me know. Make sure to give this video a like. Thank you so much. I appreciate your time. Let's keep conversation going.